It's time to go live, or Facebook will kick you out. All right, we are now live. Good morning, and welcome to another edition of PreMarket PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the you know what? It's called a webinar. That's right, we got a webinar today at 10:30 a.m. Eastern Standard Time. You do not want to miss it. It's going to be epic. In addition to that, as you know, YouTube is up to its old tricks again. Therefore, what you probably need to do is, if you're on Facebook, go ahead and like us there. All right. If you like us on Facebook, what will happen is you'll get alerts on Facebook whenever I go live if YouTube fails to give it to you. So that's a good way to have yourself hedged in case you don't get the alerts from YouTube. Facebook will most definitely give it to you. All right. And it'll give you a heads up of when I'm about to go live and things like that. So definitely follow us on Facebook. All right. Like the videos when you see them come on Facebook, and it will hook you up. All right. So first and foremost, what's up to everybody in the live stream? Good morning, Max. Good morning, Paul. Good morning, Sling and Mick and Spoon and Look and Luz and Zora. What's up? Let's see. Max got a question. Okay, what are the best equities for the oil since Dig and Doug are broken? Yeah, Dig and Doug are broken right now. They're in the hospital recovering from the coronavirus. Hopefully, Dig and Doug will get better soon. You know, our thoughts and prayers are with them. I understand that Dig broke his arm and Doug broke his leg. So hopefully, they'll have a speedy recovery. If not, peace. We're moving on. As a matter of fact, the new trade journal has been updated. If you're a member, you can just go to the alerts page and you'll see my shopping list for today. What happens is every day that goes by that I don't get a fill, I always update my order entries and then I'll post them in the room so you'll know what I'm looking to do. And I like to get my stuff done before the 9:30 opening bell. Always. When I'm doing equities, I gotta have my tickets ready, sitting there waiting to go. So when the 9:30 opening bell goes off, boom, I'm gonna get my fills more than likely than not, instead of waiting till the market opens and then you're chasing it. So definitely you're gonna want to peep that. So right now I'm looking at OIH and I'm looking at XLE. All right, so that's what I'm focusing on for the oils. The OIH, I like it because of its makeup, how it really, really will move with the futures contract like flawlessly, just about. I like it better than USO and I like it better than UCO. Don't get me wrong, USO and UCO can get going when the market's good, but in bear markets they don't. It's not the same. Whereas the OIH, it's gotten super dirt cheap, and it's not an over leveraged ETF either, which I like. I don't like I've really never liked the 3X ETFs. The only thing I really liked was, the 1X. I like those, or really you call them 1.5s. I like those. And they're usually called ultra, like ultra shares. Those are a lot better. And they move better and they're priced better with the market. And the best in the business is your SPY and your QQQ, otherwise known as the cubes from back in the day in the 90s. We used to call it the cubes. So yeah, you can those track the futures perfectly. The QQQ tracks the Nasdaq 100 futures contract perfectly. The SPY tracks the E-mini S&P 500 futures contract perfectly, and then the diamonds, ticker DIA, tracks the Dow flawlessly. All right, and then if you're going to do Russell, I like the IWM for the Russell, and those track the underlying futures contracts flawlessly. Just like GLD tracks gold futures perfectly, and SLV tracks silver futures perfectly. You start getting into the 3x ETFs and stuff. That's when it gets real sloppy because it's designed to move 3 times the move of the underlying contract. And the whole idea behind the 3x ETFs was, hey, let's build a product that has a built-in leverage, and that was the whole thinking behind it. But to be quite honest with you, it never really worked out. They're only really good for like day trading, like literally getting in, getting filled during the day session, and getting out before the close. But because of the pattern day trade rule, you can't do that but so many times. You got 3 of those to do within a rolling 5-day period before you're gonna get hit with that pattern day trade margin requirement. You don't need that in your life. You don't need that kind of stress. So to me, they're a failed concept that is a day late and a dollar short. That concept would have been great if they had that going in the 90s. It would have been great. And it would have been great if that pattern day trade rule hadn't came up. If we didn't have a pattern day trade rule, those would be the thing. And they would probably get way more open interest and volume than the underlining, like the SPY and the QQQ. People would just go in there and just trade the 3X and be getting more bang for their buck. But because the government always meddles and gets involved and all this stuff, this is where you're at. This is what happened. So in my opinion, the 3X ETFs are really not good anymore. I mean, don't get me wrong. It's like, if you when it comes to needing to short the market, that's all you got. Like with the GLD, if you want to short gold, DGLD is all you got. To be quite honest with you, that's really all you got. You don't really have too much of a choice. There's not really like a really good, a good one that's like maybe an ultra that you can get into. Not with good volume and open interest anyway. I just don't see it. So anyway, all right, let's get right into this. Here is the overnight situation. All right, a glimmer of hope. Stocks, oil jump on signs of Chinese manufacturing, recovery, and progress in the coronavirus fight in Europe. Analysts were skeptical of the Chinese PMI reading, arguing it was incompatible with past figures. All right, global M&A plunges to an 11-year low as coronavirus fears discourage deals. Worldwide transactions totaled $12.5 billion in smallest weekly value since April of 2009, according to the data. HelloFresh shares hit record high due to virus sales boost. The meal kit delivery firm expects strong first quarter sales and profits as coronavirus lockdowns lift demand. Huawei posts a 5.6% rise in 2019 profit, the smallest increase in 3 years. The Chinese telecoms titan suffered from weak overseas sales and barriers to its global expansion due to security concerns. IKEA starts producing protective gear for healthcare workers. The world's biggest furniture brand is making aprons and face masks for hospitals dealing with the novel coronavirus pandemic. I don't like IKEA's furniture, so I doubt I'm going to like their PPE. All right, Ford delays North American production due to coronavirus safety concerns. The U.S. auto giant previously aimed to restart output as early as April 6th. All right, there you go. Ford is now using the coronavirus as a scapegoat. We all know the truth. Ford has been in trouble for a minute. All right, their only claim to fame is that F-150 truck. Other than that, they ain't got nothing going on. Don't nobody want to drive none of their stuff except for the Ford F-150. That's all people like. That was the big thing. Then they made the 250, and I think they've made a 300. I think. I'm not a truck guy. I'm just going by what I think I've seen on the road. Y'all can correct me if I'm wrong. All right, Apple supplier Japan Display finalizes deal to raise $200 million from an overseas customer. Apple is forking over the funds to the maker of smartphone screens, sources told Reuters. Stocks are mixed. In Europe, Germany's DAX was flat. Britain's FTSE 100 rose 0.4%, and the Euro Stoxx 50 fell 0.4%. In Asia, China's Shanghai Composite rose 0.1%, Hong Kong's Hang Seng rose 1.9%, and Japan's Nikkei fell 0.9%. In the U.S., furniture's underlining the Dow Jones Industrial Average and the S&P 500 fell between 0.3 and 0.4%, while the NASDAQ futures were flat. There's a raft of earnings out. Zami, or Xiaomi, however you say that, and Conagra Brands are two highlights. Key data is due. Investors will be hungry for insights into U.S. consumer confidence. And I'm sure the U.S. consumer confidence is going to go through the roof. And that's because you got to factor in the online shopping. So retail sales in the stores was whack, but everything else was solid. People was buying out toilet paper and all that stuff, and they still are. The panic buying has never stopped. On other news, it was noted, I saw that that battleship, whatever it's called, Misery, Pain, whatever the name of that thing is, it pulled into the harbor in New York. And there was no news on it at all. None. Zero. Zilch. No news. Like a media blackout. Why? We already knew it was coming because Trump said it was coming. He said he was, he had called up the military and it was going to be in all 50 states, basically. So what's up? All right. Plus, we already know that an emergency hospital is now open in New York Central Park. We know about that too. All right. Even though you're not getting a lot of media coverage on that. All right. So questions are coming up. Let's see. Let's get through the overnight data first before we hit the questions. You can keep them coming, and I'll get to them after we do the overnight markets right quick. All right. So far right now we got the Dow futures down 104 points, and that is at 22,077. We also got the NASDAQ 100 down 19 points at 7,834.5. We got the even the S&P 500 down 13 3/4 points at 2597 3/4. Russell futures down 4.8 points at 1149.6. Bitcoin futures composite index is up 105 at 6,485. We were as low as 6,340 before bouncing off of that. The nat gas is up a penny at $1.70. Crude oil futures are up 92 cents at $21.02. Overnight low was $20.25, and the overnight high was $21.87. All right, taking a look at the long bond. The long bond is down a full point in 4/30 seconds at 179 and 20/30 seconds. Gold futures down $20.90 at 1622.5. It did bounce off the overnight low of $1,605.30, and is off the highs, which was made right after the open, which is $1,645.60. Silver is up 11 cents at $14.24. Very interesting. See, so now silver's trying to wake up as gold is pulling back. Let's see. Silver's overnight high was $14.35, and the overnight low was $14.06. Dollar index is up 50 pips at $99.69. It did get as low as $99.10. And it's off the overnight high of $99.94. Euro yen is off 20 pips at 118.91. The pound sterling is up 4 pips, and the euro is down 70 pips, while the Aussie is down 58 pips at 60.96. The sterling's at 124.08, and the euro's at 109.95. Looking at food. Beans are down 4 3/4 points at 877.5, and corn down 1 point at 340.25. All right, so we got a little bit of mixed markets going on here. For the most part, everything's kind of quiet. There's nothing going parabolic at the moment. Nothing to really write home to. Seems like the volatility in gold is really starting to heat up. Normally, we would say a $20 move is huge, ginormous, incredible. What's happening? It's so spiritual. But in light of recent volatility, that $20 move doesn't seem to be quite much when we had well over 100-point move the other day. So not really moved by the current activity, to say the least. Right now, it's looking like the bias is still to the long side of the gold market. I do have the gold market in a bull market, as I showed you in the charts. And so we're going to go with that. Now, if you were looking at a play for it right now, as I indicated, I'm still holding the long GLD position, of which I most likely will get stopped out on the open. And that's okay, because it is a I'm sticking right to the system. I'm not even second guessing. I'm not playing around. If I'm stopped out, it's because I don't need to be long anymore at this time. The market's not ready to move like I expected it to move. And sometimes you have to do that. If the system tells you to tighten your stop, you tighten your stop. No questions about it. You do what you need to do. So that's what I'm doing. And in the pre-market right now, I can see that the market is pretty much on that GLD. It's right at this morning's stop. So I know it's going to take me out of it, which is fine. I'll stand aside for now and then look to get back in it when and if the market is really ready to take off. Sometimes you get like these little false starts. Market seems or appears that it's ready to do something, and then it's really not. So we'll see. But I did go ahead and tighten the stop up. And one of the reasons why I did that too is because we have an actual stop and reverse in place on the GLD. Now, I'm not looking to short the GLD. I doubt even if the shares are even available. I'll have to look and see, but I don't have any interest in shorting it, to be quite honest with you. Not right now. Not when the momentum is here. So if I'm stopped, it'll just give me another opportunity to get long when and if that opportunity presents itself. But right now, I'm not tripping off of it. I just want to be authentic, and I want to stick with what the system is telling me. And technically speaking, right now, to be quite honest with you, the system is showing the short side of the market right now. So that's where the turning point is on the intraday price inflection points. It's not giving off a long today. It's basically a hold. If you're long, you're holding, and then you're watching these price inflection points for possible turnaround in the market, and a giving up of momentum on that GLD. All right. Even though we have trend momentum still bullish, all right, and we still have a bullish reading for rally alert, we still have to pay attention to the intraday price inflection points. They cannot be ignored, not at all. You got to pay attention to that, because if the stop is hit, it doesn't necessarily mean you get short here. It just means that you're not supposed to be long at this moment, because you're at a crossroads in the gold market. Gold is trying to decide what it wants to do here. Is it going to get ready, and is it going to break out here, or is it ready to turn and fall sharply? And according to what I'm looking at here, it's looking like it has the ability or the propensity to drop more. Now, we did bounce from that overnight low of 1605, and we're currently at 1626, but we're still well off of the high point. Remember the chart I showed you yesterday? It shows some consolidation top side of the Kumo cloud and north of the trend line support, but that's also a point where you can lose momentum also. So I had to bring that up. All right, now we can look at some questions. I know there were quite a bit. So let me just scroll through here. All right, I answered that one already. Let's see which one else we got. All right. All right. All right. Golden, welcome aboard, man. Welcome. All right, let's see. What else? Okay, first one here is, so how do you think the lockdown production in Germany, UK, and USA, like they did in China, and if so, what will happen to all markets? Okay, no, that's the last thing that they wanted. They don't want to lock down here. They don't want to lock down. Trump already said he does not want a lockdown. He wants the, because a lockdown means your economy literally comes to a standstill. It stops moving. It does not move, and you're guaranteed a depression at that point. He does not want to do that on his watch. He wants to keep the country open, while at the same time having people to um, using the honor system. He's saying, look, you need to self quarantine. Can you self quarantine for me, please? And he's leaving it in your hands to do that. He doesn't want to make it mandatory. But on the flip side, he's hedging his bets. That's why he called up the reserves. All right, he called them up because in case there is any kind of civil unrest, he's ready, and he got all that locked down. Make no mistakes about it, people. There's nothing that a military can do to cure a virus. That's not what they're in the business of. What is their business? Their business is warfare, combat. All right. So if you see boots on the ground, oh, we're here to help. No, you're not. Your main job is combat. Yeah, we got some hospitals open up. Okay, you know what? I'll give you that. You got your mass units. I'll give you that. But again, you specialize in treating people wounded in battle on the battlefield. That's what you specialize in, not viruses. But I know a person can argue and say, well, they do have expertise in this because they have gas training. They have training on how to deal with gas attacks and things like that. Again, but a gas is not a virus. Yeah, but it still could be considered a bioweapon. Okay, I'll give you that too. But we already got like 1 billion hospitals in the United States. There seems to be some type of a hospital annex on every corner. No one's talking about the urgent care facilities. Do you know how many urgent care facilities there are in this country, and how many hospitals and clinics and free clinics? And man, there's so many different medical complexes. Now we still have our underserved areas, but let's not get it twisted. Those medically underserved areas are very low population as well. The majority, the main arteries of this, what people are worried about is like the big cities like New York, Chicago, LA, you know what I'm saying, Miami, DC, Atlanta. They're thinking about the big cities, okay? And even in those big cities, we got mad hospitals. We got mad hospitals, all right, and mad doctors. The two most over flooded occupations is a doctor or a lawyer. All right. The country is full of doctors and full of lawyers. We don't need any more. Technically speaking, we good right now. We don't even really need any more. The only shortage you heard them talking about was a shortage of nurses. All right. But we don't have a shortage of doctors. We got plenty of docs. Okay. So you don't need the military for this. All right. This type of show of force is because you know something else, and you're protecting yourself from that which you know that you're not sharing with the American people. There's absolutely no reason to put military on the ground unless you are afraid of some type of civil unrest, or you want to shore up your borders and you're afraid that this could weaken you and make it easier for an enemy to invade. All right, they would never admit none of that to you, but you gotta draw things out to their logical conclusions. So the markets aren't going anywhere. They've already mentioned they're not going to close the markets. The markets are going to take care of themselves. All right, there's our opening bell. Don't get it twisted though. The markets are managed. I don't like to use the word manipulated. I'm going to use the word managed. Our global markets are managed. All right, so make no mistake about it. And because of the nature of the beast, they have to be. All right, they have to be. All right, I'm out of the GLD. All right, I did get out of the GLD with a tiny little microscopic loss. So no biggie there. And I just got filled on my XLE for those that want to know. All right. Everything else is still working. All right, so let's see. Next question we got. But that was a fair question, though. I don't think that the lockdowns coming here and the lockdown in other countries is not going to stop the market either. The market is very dynamic. Okay, let's see. Thanks for your knowledge, Dex. I'm scared to get into the market. I've never traded anything. I'm clueless how a dummy like me gets started. I wonder if I'm too late already. You're not too late already for anything. One of the things we go by is that the market will always be here. There's always tomorrow. If you miss a trade today, there's a trade for you lining up tomorrow. There's always a trade somewhere. I'm going to take a risk here, and I'm going to quote somebody, and y'all going to start laughing at me. But one of the quotes that I like is what Jim Cramer used to always say on his broadcast. He would say, there's always a bull market somewhere, and I'm going to help you find it. So with that being said, there's always something going on in a market somewhere. You know, if you look at how many equities there are worldwide, we have like 1 million equities worldwide. You know what I'm saying? We got forex, we got crypto. You know, we got futures. There's markets doing something everywhere. You can go long, you can go short. All right. So you're not late to anything. The only thing you missed was the sell-off in the equity market. That's it. But technically, you didn't really miss that. You just missed the first phase of it. We still have the second phase staring us in the face. So you're coming at the right time. You're literally coming in the market and learning how to do this at the right time. So yeah, timing is everything, right? You're at a perfect time to learn this. So when things really start jumping off again, you'll be right here to benefit. All right, next question. Should beans and corn be down with everyone buying up food? That's a very good question. So let's dive into it. All right, so first and foremost, when we talk about the commodities markets, keep in mind that there is a general principle. It's not just the supply and the demand features when you talk about food, but food is a commodity. So you got to look at a lot of different factors and variables. The number one factor and variable when it comes to commodities, as far as the commodity futures, we're talking about the US dollar. If the dollar is strong or up, it lowers the prices of the commodities. All right. If the dollar is down, then it raises the price of the commodities. So the fact that corn and soybeans are down right now, that's on the back of the US dollar being up 40 pips right now. So as long as the dollar stays bullish, then it's going to cause it's going to suppress the price of corn and soybeans. And yes, wheat, corn, and soybeans are in a lot of foods. You'll be hard pressed these days to try to find a food that doesn't have some type of corn, wheat, or soy in it. All right, very few foods that we have that in it. All right, a lot of food. I was shocked to see how much, food has wheat in it. A lot of your meat products have wheat in it. Go figure. Very interesting. Okay. Let's see here. Next one. Is actually crude going to crash? I mean, the supply glut is getting to the point where they are running out of storage space. All right. Plus, all the frack and shale gas workers are being balled up where I'm at. Okay. That's another good question. Again, talking about commodity futures now. Okay. We're talking about commodity futures. So where does that put us? Okay. Well, supply and demand is the number one thing. We know that. We all agree that is the number one thing. Okay. So with that being said, we know that's the number one thing. The next issue on the table then is this. Is the demand really down because of oversupply? Is it really like that? I'm going to say no, I don't believe that. I don't believe that at all. One of the reasons I don't believe it is because, like I indicated and explained to you guys last night that the U.S. bond market and the U.S. Crude oil market are two of the most heavily managed markets on the planet, and that makes them very gangster. They're extremely gangster. When I say managed, all right, that's a nicer word than saying manipulated, because I don't mean to manipulate it in a nefarious way, like like the system's working against you, the individual, the retail speculator. No, I don't mean it in those terms. When I say it's gangster, I mean the way that they go about their day-to-day conduct. You wouldn't understand it if you weren't actively trading in the 90s. If you weren't trading crude oil futures and heating oil and natural gas futures in the 1990s, you wouldn't know what I'm talking about. Or the early 2000s, you wouldn't understand. But those floor brokers were absolutely garbage, man. They were horrible. All right, they were horrible. And they'd be like, "Yeah, we didn't fill your order. What you gonna do about it?" I mean, they was on that kind of time. They were gangsters, man. You would thought the Sopranos was running the crude oil futures pit, the WTI pit in New York. And the floor was in New York. And like I said, they were off the chain. So it's also gangster because the way they go about their managing of that market. And now it's being used as a political weapon against OPEC. What can you do about it? That doesn't have anything to do with you per se as the speculator. You just have to know what side of the market to place yourself on, because it really has nothing to do with you. It's just about how it's being used as a political instrument. So yeah, they say we have an oil glut, but they're only saying that because remember what I taught you guys. When they are getting ready to explode a market, they got to break it down to its smallest degree first. So they're going to let this oil fall as low as they can get it, and then they're going to come in and they're going to basically, quote unquote, corner the market, and they're going to go in and they're going to drive the prices back north of $1.50. You wait and see. We're going to get back to that $150 a barrel oil and more and higher. All right, it's going to happen. The oil does not stay cheap. All right, it just doesn't. This right here is a once in a lifetime thing you can tell your grandkids about, because some of you are younger, so you weren't around when gas was 89 cents and 99 cents a gallon. So this little brief window of going back in time, if you go look at your pump, a lot of you will probably be able to find that 99 cents a gallon gas now. It ain't going to stay that way for long. Trust and believe that. It's not going to happen. Can't happen. All right. So we're going higher. Who knows how long we'll stay down here, but it's not going to be, it ain't going to be too long, and we're not going to stay here. We're never going to see those kind of prices again. It's just how it is. All right, let's see here. Does the gap need to be filled in the GLD? Well, like I said, all gaps have to be reckoned with at some time. The gaps that mean everything to the market is your daily and weekly charts. All right, so monthly, weekly, daily charts are your pointers. Intraday charts do not count. Intraday charts do not count. Don't ask me why that is. It's just what it is. It's just a thing in the market. Not everything can be quantified, all right, in the market. You can't. Some things you just can't really account for or really explain as to why, because we don't know why. We just know that certain things happen, certain anomalies exist, and we just have to acknowledge it and keep stepping. You deal with it and you keep it moving. There's an issue, there's a situation. You just have to flow with it. How and why, you don't even need to understand and know why, the how and why. You just need to know that it exists, and then what are you going to do about it? Okay, here's an issue that I have to deal with. What am I going to do? What's my plan? What's my trading plan to deal with this? This is an issue. This is a situation that exists. It's not going anywhere. I got to deal with it. You feel me? So we don't always know the whys. We just know that something's there, and then we adjust and learn how to cope with it. All right. Excuse me. Let's see what else we got. Whoa, 90 days in jail and a $5,000 fine for breaking quarantine in the nation's capital in DC. Are you serious? Whoa, I hadn't heard about that one. But I have been hearing they've been cracking down, with these quarantines. Now, see, here's the situation though. They said self-quarantine. If it's a self-quarantine, why are you basically hitting people with mandatory fines and punishments? How can you mandate a punishment that's not an actual mandate? The White House has said this is not a forced thing. This is a voluntary thing. So if it's voluntary, it's not by compulsion. So how can you penalize someone for something that they're supposed to do voluntarily? That doesn't make any sense. And what about people going out to the store and going out for food? What about that? You didn't make it mandatory. See, that's what I'm saying. That's the slick stuff I'm talking about. How they say one thing, but they mean something else. All right. They try to be slick with their laws and the way they speak and the double speak and the redefining of words. That's what I'm talking about. And sorry, and in the grand scheme of things, that's still a lie. Because you're not letting your no mean no, and you're not letting your yes be yes. Anything outside of that is a lie. All right. And we don't condone that at all. That's not how you deal with people, not by lying. Okay. Okay, so another trade just went off, and this one is on the bonds. All right. So yeah, that's an issue. That is definitely an issue, and it's jacked up. It's really messed up. So the state wants to make money off of you during this crisis by hitting you with a fine when they said it was voluntary. Again, that doesn't make any sense. If it's voluntary, it's not compulsory, meaning that it doesn't have penalty associated with it. But leave it to your state to find a way to extract money from people in these hard times. So they're going to hit you a $5,000 fine. You just got laid off on your job. You're not working. You're not generating income. And they're going to hit you with a $5,000 fine and 3 months in jail. Whatever happened to quarantine? See how that doesn't make any sense? I can understand they're saying they're going to fine you and quarantine you, but they didn't say fine you and quarantine you. They said fine you and put you into the system. So they're going to extract double money from you. A fine is a penalty, a financial penalty. And then when they put you in jail, there are more fees and penalties associated with that. All right. When you come out of jail, you come out with more debt because they charge you for every day you're in the jail. All right. So, and if whatever you need to do while you're in there, medical, whatever, you're going to get a bill for that too when you leave. And guess what happens? If you can't pay that, then guess what? You go back to jail. See what I'm saying? It's double and triple jeopardy. It doesn't make any sense. They're saying one thing and doing another, and it's disgusting. All right. Anyway, so moving on. Let's see what else we got. See if I missed anything else. All right, let's see. Okay, here we go. All right. I got a question yesterday about trading SLV and COMEX and the taking delivery issue from a new member of ours. Okay. Can you give your thoughts on that common objection to trading silver contracts, etc.? Oh, every time I think that an issue has been put to rest, it rises its head up. All right, so that's just telling me that we need to do an official video so we can point people to that. All right, the OIH just went off. So we got We we got long the oil, long, and we got long the paper on the bonds, so, and the energy. So those are two that just went off for those that are following. All right, I might have to do another thing on that. Seriously, I might have to do a separate video on that. All right, so here we go. I'll say it here once, and then we'll do it again. I'll make a video or something. All right, so every so often, and usually around this time of year, like the beginning of the year, that's when the whole cult of the Great Pumpkin shows up, and they start talking about the Great Pumpkin. Isn't it nice to sit in the pumpkin patch with Linus and wait for the Great Pumpkin? There is no Great Pumpkin. I'm sorry to bust your bubble. There is no Great Pumpkin. The whole issue with the COMEX being defaulted and going under, that right there is fake news. It has been fake news for decades. It is not a new theory. It is not it's not something new. It's a new conspiracy theory or conspiracy fact or no. Don't even waste your time with that. They've been saying that for decades. All right, decades. The only way the COMEX or any of the major facilities would ever default on the commodity side of things is because someone was involved in some just outrageous corruption. And I mean from the embezzlement and mismanagement of funds perspective, like someone stole all the money or did something crazy like that. All right, the COMEX is not going anywhere, folks. All right, but they have, but we just found out from the Commitment of Traders reports that they have, 1 trillion ounces of gold out, and really there's only 1,000 ounces of gold left in the world. So they've sold more contracts than is worth in gold, and they're going to default because there's no way in the world they're going to be able to take delivery and all of that. Okay, oh my goodness. There is no Great Pumpkin. Let me explain for those who don't see this. This is why people have to be careful who they listen to and follow on YouTube. Thank God for social media and YouTube. It gives the average person a platform, but you still have to hold some accountability, and you got to have some kind of morals and ethics to your mouthpiece. You don't just start spitting everything that comes into your head as facts. You gotta do your research, and if you don't know something, you gotta ask somebody. Find out what the truth of something is. Don't just go spitting it because you heard some person that you subscribe to on YouTube say something. This is the last time I'm gonna say this part, all right? Every person on YouTube is not an analyst, it's not a trader, it's not an economist, it's not a chemist, a doctor, a lawyer, a scientist, a mathematician, fill in the blank. People can just say that they are and not have to prove that they are. And they're not, because the things that they say are absolutely preposterous. And anyone in the field of study for real that they're claiming that they know about is going to pull their card and check them. All right? They're going to check them and say, what you just said is totally bogus. There is no Great Pumpkin. If they knew what they were talking about, if they were a real futures trader or someone who actually worked in the futures industry as a licensed associate, meaning that you had a license and that you were a member of the National Futures Association, better known as the NFA, under the auspices of the CFTC, which is the regulating body for commodity futures, just like the SEC is for equities, then they would know that not all futures contracts are deliverable. What that means is you're not going to get 5,000 bushels of soybeans delivered to your front door. What happens is if you don't get out by first notice day or last notice day or last trade day, you're going to get taken out of the position and they're going to pay you in cash. If you were up on the trade, they're going to go ahead and give you the money. If you're down on the trade, they're going to deduct that from your account. You're not going to get soybeans delivered to your door. Your broker is going to take you out. Don't worry about it. The only way you can take delivery is if you open up what is called a hedging account at a commodity futures brokerage firm. You have to open a hedging account, fill out special paperwork, and then you have to fund the account with the amount of money it costs to engage in that contract. So, for example, we're using silver and gold. You go ahead and you put on a contract to buy some gold, one gold futures contract. All right, and the big one is 5,000 ounces. That contract covers 5,000 ounces of deliverable gold to your front door at expiration. What happens is you have to have, when you put that trade on, see, a person like myself, the retail trader, the retail speculator, I only have to have whatever the initial futures margin is. All right. So let's say it's $1,000. That's all I gotta have. I just have to have $1,000 in my account. Boom. I can initiate that trade as long as I have enough to cover the overnight, which is the maintenance margin for that contract. I can hold that contract until expiration if I want. But as a hedger, nope. You gotta have in your account the total amount of that contract. So if that 5,000 ounces is valued at $1.5 million, then you better have $1.5 million in your account, sir, ma'am, because you're a hedging account. You're saying you're trying to hedge a physical position. Either you're a producer or a grower of whatever. So you're trying to hedge your position. You're going to be charged the total amount of that contract. So if it's $1.5 million, you got to give them $1.5 million. That just covers the gold that you're going to have delivered to you. And you got to cover the storage fees and the interest. You got to have all that money in your account and put that in their hands up front because you're taking delivery. You got to have it in you got to have it. You got to have it. All right, because now you're not really trading. You're taking delivery. So you're acting as a producer, as a mill, if you will. All right, that's how you're acting. You're saying I need to take delivery. All right, that's the only way you're going to take delivery on those contracts. The only way to take delivery is to open up the hedging contract and pay that money up front. Now, there's another way that this thing works. Some futures contracts are not deliverable at all, whether you have a hedging account or you don't. They're not deliverable. If you read the literature on the actual contract, it says these are not deliverable. They are they're closed out and they're settled in cash settlement. All futures trading is cash settled unless done otherwise, unless you're trading an instrument that is not deliverable, or you have already established a hedging type of an account. With that being said, how can they go belly up then? If 99.9% of all futures traders / speculators do not take delivery, how do they go belly up? You make no sense. You make no sense. The way they operate, I get where people are going. They're saying, well, they operate like the fiat, like the banks. That's how they're doing it. Fractional reserve currencies. Well, they're like fractional reserve trading. I'll be generous and I'll grant that to you. But because of what I just told you before that, now you see how that doesn't make sense. The banks they do have a risk, because if everyone comes into the bank at the same time and wants to withdraw all of their money, then they're going to have a problem because they physically don't have the money in the bank. Unlike the commodities futures trading merchant, they don't have to worry about everyone saying, I want to take delivery now. They don't. First of all, you didn't fill out the paperwork. Second of all, you don't have that amount of money in your account to take delivery and all that other stuff, and or you're trading something that does not settle in physical. It settles in cash. All right, capiche? For more information, please see PulseWaveTrading.com. We have a bunch of futures 101 trading videos for you to go ahead and watch. All right, and those are productions from the commodities entities themselves. All right, you can get them right from the CME or the Chicago Board of Trade. We call it the CBOT. You can get it from CBOT. You can get it from CME. You can get it from. They got videos from the Board of Options. You name it. There's education out there for you. So educate yourself. Don't just blabber off something that you heard that is totally false and not true at all. And to save me time, Frank, can you have Jen take this part out that I just did? And there's the video right there. That way I don't have to repeat myself. So have her take this clip out, and then boom, we can put it up there in the education part of it. All right, moving on. All right, let's see here. All right, here's a good one. If Exxon and others cut their dividends, will the energy equities continue to fall? First of all, equities fall, and even though they do pay dividends, even though they increase dividends, equities can still fall if they increase dividends, cut dividends, or if they increase, cut, or cancel, they can still fall. Dividends is attractive to a lot of these large institutions and stuff, but no, again, it's about supply and demand. And because Exxon is in the commodities business, Exxon is like your gold miners. All right. So Exxon, picture Exxon as a gold miner. All right. What did we learn about gold mining stocks? First of all, they're equities, but they're equities whose business is commodities. So they're going to be affected by what the commodities themselves, the underlying commodity that they deal in, they're going to be affected by those prices. They're also going to be affected by that supply and demand, underlying supply and demand, and then they're going to be affected by what ails every stock: earnings, dividends per share, layoffs, you name it. Anything and everything that affects companies, corporations, they're going to be affected by that too. So companies that deal in commodities suffer a double jeopardy type of a thing, but it can be good and bad. If crude oil jumps to $300 a barrel, Exxon's profits are going to be insane. So they will get a boon from that. All right, they get a buff from that in their share price. All right, or if they do something else, let's say the energy prices are still where they are right now. I'm looking at my thing. We're still at $20 a barrel on the crude oil. So let's assume that all right, well, $20 a barrel. So we'll assume that let's just say we stay here for the next 6 months. The price doesn't budge. It's at $20 a barrel. But let's say Exxon has found another oil reserve somewhere. Let's say they found it. Let's be funny. Let's say they found an oil reserve in Washington D.C. Right underneath the Capitol building. All right. Now we know there's nothing underneath there but swamp, but we're just being funny. So, and the government allows them to put a drill, an oil well right there, right by the bathrooms. Okay. And let's say this is the biggest oil deposit in the world. It has 1 billion, trillion, quadrillion, million, fulfillion barrels, and it produces this every month. And it's just a never-ending thing of oil. First of all, if they get that and they get to lay claim to that, the stock price is going to explode. Also, even though the price of oil has not exploded, their share price will explode because now they own the rights to the largest oil discovery on the planet, and they have the ability to pull it out of the ground. No one else can. So yes, their stock price would explode off of that alone. As with any stock, just like Apple stock can, let's say it's trading at $200 today, right? And it's been trading at $200 for the last 6 months. All they got to do is say, we have now come up with a new Apple iPhone. This phone is going to retail for $5,000, the most expensive phone we've ever put out on the market, right? And the reason why we're charging $5,000 because it cures cancer. Every day at midnight, the phone is going to ring an alarm, and if you have cancer anywhere in your body, it's going to kill it. And we guarantee this. And yes, we have this approved by the FDA. And then a press conference comes out that he's standing on the White House lawn talking to Donald Trump saying, yes, this phone does cure cancer and it is $5,000. And that's all we have to say. Have a nice day. Do you not think that Apple stock is going to go from $200 to $2 million a share, like overnight? Boom. Exactly. So companies that trade in commodities have double jeopardy. They can get hit double hard on the negative side, or they can be blessed, double blessed on the positive side. So the dividends is only a part of the story. All right, it's only a part of the story. It's not the whole story. So that's a long answer to your question, but I just had to put that out there for you. All right. With that being said, man, market's still kind of quiet. Like I said, the alerts just went off. We got alerted in the OIH, the TBT, and the XLE. So I will keep you abreast of that, and I will update in the trading room after the thing here. All right, so that's it. We're done, man. I'm out of here, and I'll see the rest of you in the trading room, and the other half of you, I'll see you guys for this evening's end of day report. And don't play yourself, man. Come on over to PulseWaveTrading.com. Come break bread with us. Come over to the trading room. Learn how we do this. It's only $69 a month to learn the system, to learn how to use this easy methodology. Just like Geico said, they said it better than I can ever say it. It's so easy a caveman could do it. And on that note, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.